Here from Reliant Mortgage Solutions. Today I'm putting together a quick video outlining our somewhat fun 10 commandments for first-time home buyers. I guess it's not just for first-time home buyers, it's for anybody, but I think it's important to know everything on the list and to know why everything on the list is important. So I'm going to start at the first one and just work my way down, and we'll talk about each one before the end of the video. That first one is thou shalt not change jobs or become self-employed. They're going to check your employment status at the beginning of the loan process, but then also they're going to check your employment status at the end of the loan process also. It's called a verbal verification of employment, where they actually call your employer and make sure that nothing about your employment status has changed. So therefore, like it says, really important not to change jobs or become self-employed until after everything is closed with your mortgage and you're into your house. Second one, thou shalt not buy a car, truck, or van unless you plan to live in it. The reason being that it's unless you plan to live in it is that these are oftentimes some of the more expensive liabilities that we see on credit reports. And if you're relatively close to the qualifying cutoff line, and then you go out and you buy a truck, you buy a car, you buy a van, a lot of those times it can push you out of qualifying range, and then you can kill your deal inadvertently without knowing you were going to do so. So, similar to the first one, don't do this until well after your mortgage is closed and you've made your first payment and everything is said and done, and then go ahead and buy whatever you'd like afterwards. But it's important not to jump the gun and do that during the process. Thirdly, thou shalt not use your credit card or let your payments fall behind. Again, kind of similar to the first one where they check your employment status at the end of the loan process. These lending companies are also going to recheck your credit at the end of the loan process as well as the beginning of the loan process with the credit report that we end up sending them. They do this in the form of a soft pull, not a full pull, so it doesn't come up as a credit inquiry or anything, but they do look. So therefore, don't rack up credit card bills and now all of a sudden you've got a higher credit card balance, thus a higher credit card payment, because just like if you were to go ahead and buy a truck or a car, that again might push you out of qualifying range. That being said, let's move on to the fourth commandment. This is thou shalt not spend the money you have saved for your down payment. It's kind of self-explanatory. You're going to need to use that money for both down payment and closing costs. And, you've probably put a lot of effort into setting it aside so that you're ready to make this purchase. That being said, don't let that slip and spend it on something else right before you're at the finish line. Make sure you're conscious that you've got your money set aside and you're ready to go so that when you have to wire it to the closing attorney for your closing, it's all there and there's no issues. Moving on to the fifth commandment now, it's thou shalt not buy furniture before you buy your house. This is especially important if we're talking about financing furniture. And I've seen in many cases people will go to places like Rooms to Go or Living Spaces, and they'll ultimately finance stuff like couches or maybe a fridge or maybe a TV. You never want to do that because that's new credit card debt, just like anything else. Or maybe it's a new installment loan, and that's similar to this. Don't let your payments fall behind. Don't use new credit. So again, don't buy furniture until you're in the house, because you're either going to spend money that you had set aside for your down payment or you're going to buy it on credit. Either one can hurt your loan scenario. So please wait till after the purchase to buy the furniture. Moving on to the sixth one, thou shalt not originate any new inquiries on your credit report. Again, this is because these lending companies are going to do that final soft pull on your credit and take a peek at your credit one more time before they actually go ahead and close and fund your loan. That being said, if you go out and you apply for new credit, say you're applying for a car loan, again, don't do that, like we mentioned in Commandment 2, or say you're applying for a new credit card. All those things are red flags for these mortgage companies, and they really don't want to see it. So again, wait until you're totally to and through the closing before you go and do any of these things. Moving on to the seventh commandment now, it's thou shalt not make any large deposits into your bank account. Now, the reason being for this is that all money in your account needs to be what's called seasoned. And seasoned money has to reside in your bank account for at least 60 days or 2 months, aka 2 bank statements back into the past, because that's how many bank statements we're going to send to the lender and that's how many they're going to see. So if you go ahead and make a large deposit into your bank account, say it's like a gift or something from someone who's trying to help you get this purchase finished, well, if you go ahead and move that money too soon, it's going to actually create more headaches than it's worth. So this is maybe the most important thing on the list. Always, always, always ask your mortgage professional, and that'll be anyone that works for Reliant Mortgage Solutions, if and when you should move the money. And we'll be able to tell you. In some cases, it's better to go ahead and just transfer the money straight to the closing attorney at closing. And then that way we're going to avoid lots of hoops to jump through and extra paperwork that we may otherwise need to do if you move the money too early. So again, don't make any large deposits, and this is commonly in the form of gift funds. Wait, ask us when to move it, and we'll tell you when and where to move it. So that being said, moving on to number 8, thou shalt not change bank accounts. Again, this goes back to that 2 months account seasoning that I mentioned in the last, in the commandment number 7. And this thou shalt not change bank accounts is the same idea. We're going to need 2 months back of bank statements, your most recent 2 months, in order for these monies to be seasoned. Well, if you change bank accounts and that money flows from one account to the other, now we have to connect the 2 accounts and show money coming from one and into the other. Or if you just opened it, so to speak, and it's a new account, then that becomes really hairy too, because we're not going to have 2 accounts for that money. So I would say, again, do not change bank accounts until you're completely finished with your mortgage transaction. So moving on to number 9, this is also a very important one, is thou shalt not co-sign for anyone. And why would that be? Well, it's again because they're going to take a peek at your credit at the end of this mortgage process. And if you've co-signed for someone, now you're also liable for that liability on their credit report and on your credit report. So now your debt to income ratios, or maybe your credit score itself could become out of whack, and it could prevent you from being able to get this house. So I would just be really wary about this and never do it if you're thinking about doing a mortgage transaction. Wait until, like all of these, wait until well after everything is finished. And then the final one is thou shalt not purchase anything until way after closing. This one's a little bit facetious because obviously you need to purchase things occasionally just to live. But what the point we're trying to make is that you're going to try to mitigate your spending during this process, because again, you don't want to get all the way to the end. You're ready to send your money to the closing attorney for your closing costs and down payment, and then all of a sudden you don't have quite enough, or you've spent on something that you didn't need ahead of time. Again, it goes back to maybe that rooms to go thing, or maybe buying a car. Just don't do that at all. Just wait until after your closing to buy anything substantial. This, of course, is not talking about food or whatever else, but just don't buy anything big that could mess up your closing. And then this is the main point of all of it down here. If you read this final sentence, committing any of these acts can dramatically alter your credit score or debt to income ratios and can block your chance of closing on your home purchase. So again, if you do any of these things, your risk of blocking your own chance for your home purchase goes up. So just try to avoid them at all costs. Don't commit any of these sins, you might say, because these are the 10 commandments for home buyers. And if you keep that in mind and you avoid all this stuff, then you should be just fine. But anyway, thanks for making it through the whole video, and we hope to help you soon with your home purchase.